record. Okay. I am here with Diane Beaumont from Benchmark Mortgage, and I just wanted to get you on an interview with Zoom. I wish we were in person because that would be so much better. But just talk about what you're seeing in the mortgage industry and a little bit about yourself. And let's start with you and your history in the mortgage industry.
Okay, perfect. So my name is Diane Beaumont and I'm with Benchmark Mortgage. I've been with Benchmark since 2009 and been in the lending industry for a little over 20 years. Benchmark is a nationwide lender based out of Dallas. We're a mortgage banker, relationship-based, which means we underwrite and fund all of our loans in-house, which gives us a higher service level and maybe some common sense underwriting. We have 3 physical offices in Colorado, one in Crested Butte, one in Colorado Springs, and another one on the Front Range.
Okay.
But we service the entire state of Colorado.
Great. Yeah, and we've had wonderful experiences with you and Benchmark for sure. So you're one of our favorite lenders here at Signature Properties. So what type of loans are you specializing in right now? What is your focus?
Well, I think it needs to be prior to COVID and post-COVID.
Yes.
That's how
that would be great.
Fine, for sure. So prior to COVID, we had a pretty broad spectrum of jumbo lending, as well as some niche products that had come out, like 4 nationals and maybe bank statement programs, some other things that would help more people qualify. Since that time, all of the niche products and jumbo products have been suspended temporarily. So for us, as well as bond programs. So right now we're back to conventional, VA, FHA, and USDA mainly. Credit score requirements, a lot of the investors have raised, I should say, the credit score requirements to 680. At Benchmark, we're actually doing the common sense approach. So while there's no minimum score requirement, we are looking at it on how solid it really is, and do they still have a job, and was their low credit score circumstantial?
Okay. So I've heard from some people that they are on hold on loans because they might lose their job, but they haven't yet. Is that something that you're considering?
All they're looking at right now is to make sure that you're still working and that the probability of continued employment is good. So we are doing additional checks with self-employed borrowers to make sure that you've received commission checks, for example, so far this year. Knowing that there's going to be a temporary moratorium, but they do want to make sure you've got listings on the market and commission checks coming in the past.
Okay.
In recent
that
months.
makes sense.
If you work for the restaurant industry and you're off work, even if it's a job attached layoff, we do have to have you back on the job.
Okay. All right. So most people that are either furloughed or laid off are going to have a hard time qualifying right now, even though they're going to get back to work. Okay.
That's correct. Yep.
So what are interest rates doing right now?
Interest rates for VA have been the lowest. So we're doing VA Streamlines 30-year fixed at 2.75 right now.
Oh.
And closing them in about 2 weeks. So that's really pretty solid focus right now, especially for our VA community. Conventional rates are in the low 3s for a 30-year fixed and low or high 2s for a 15-year. So
that's good. So they're still staying low.
Yeah, very good, but it's volatile. So we'll see them move, at the drop of a hat, and then they so far are coming back down. But
there anything that's not volatile right now?
No, exactly.
Crazy.
Volatile and unknown.
Yeah. So how has your business been impacted by COVID and all these things that are happening?
Well, it's been impacted, mainly because of the additional documentation and the guideline changes. So as well as the length of time. So I think because we are still actively lending and a lot of lenders have gotten out of the business altogether or put a hold on refinances, we have some competitors out there that are taking 6 months to close a VA Streamline.
Oh my gosh.
So that has put a lot of workload on Benchmark just from a capacity standpoint. So fortunately our corporate office was staffed up, but we are seeing where turn times used to be 30 days consistently. We're seeing them slip to 45, sometimes 60 days, depending on the appraisal situation.
Okay,
Drive-by appraisals are allowed. So if it's a purchase or a streamline refinance or a rate and term refinance, we can do either a property inspection waiver or a drive-by. If it's new construction, we still have to have a full appraisal, or if it's cash out. So that's helped a little bit because they've given us some relief on the appraisals.
Yeah, that's nice. I mean, the one thing that the governor has done for Colorado is allowed anything that's under contract to continue, which includes appraisals and home inspections. So that's been helpful for all of us. And so you answered your timeline question for funding. So if I entered a contract today and somebody was going to get a conventional loan, what would my deadlines look like?
45 days.
Okay. 45 days from today to closing funding.
That's correct. Yep.
Okay. That's great. That's what we've always run with. So that really hasn't changed much, I don't think. And you have their VA loans that you can close quicker, and some unconventional loans potentially that you could close sooner if necessary.
Correct. Yep. Depending on the circumstances. But as you know, in VA also, we can do VA jumbo loans. So that is the one jumbo product that has not stopped or slowed down. So if you've got a veteran that's buying $1 million house, we can still fund and underwrite that loan.
That's great. So have you had any loans not fund, or have you had, how many loans have funded since COVID?
We funded, Benchmark as a company has funded over 2,000 loans a month for the last 3 months and continuing to fund that many or more going into April. So I have not had one that got to the closing table and we couldn't fund it for some reason, other than a job layoff. So I've got 2 people in the food service industry that are just waiting to close. They're all ready to go. They just need to be back on the job.
Hopefully that's soon.
Hopefully.
Yeah. And what recommendations do you have for somebody today that's looking to purchase a home in our current situation, as far as qualifications and is now the time? Should we wait? What would you recommend?
Well, I think now's still a great time to buy because interest rates are not going to be this low probably in our lifetime again, I would assume. So I think it's a great time to buy. I would just caution everybody as a realtor, as you're talking to people, I would caution them to, guidelines are changing. So they may not have had to provide documentation that they're still at work or have contracts coming in 2 months ago, but they do have to do that now. And certain guideline changes, and they may change in the middle. So be patient and go with us. And if things change, we just back up and punt and get what's needed to satisfy the underwriters. So.
Yeah, that's what one thing I love about working with you is that you work really hard to make everything work for everybody and exhaust all avenues. So I appreciate that about your business. Another question we have is, if someone is applying for the mortgage furlough, let's say they can't make their mortgage payment right now, and they've been approved by their mortgage company to not make payments or be furloughed for that time, is that going to affect their future refinancing abilities or future ability to obtain a new loan?
If somebody applies and they have any loans in deferment right now, aside from student loans, of course, which is a whole different deal, but a mortgage loan that's in deferment, we cannot lend on it right now. How it's going to impact in the future is kind of unknown. So I would caution people, really, I mean, if you're in need and you've lost your job, obviously take advantage of it. If you're doing it just because it's out there and it's quote unquote free money, I would suggest not taking advantage of it because we don't know the impact of how it's going to impact things moving forward. But right now, if you've applied for a furlough of your mortgage payment, you can't get financing right now.
That's kind of what I thought too. And there's so many unknowns in general on what's going to happen when we come out of this. But I think that's great advice for people. Is there anything else that you want to add? I've kind of gone through my questions, but do you have anything else you want to talk about?
No, I don't think so. I think we are still lending, and now is still a great time to buy a house if you can ever get in to see it. So hopefully we'll have some of that back in a very short amount of time.
I hope so too. Well, thank you so much, Diane. I really appreciate your time today.
All right. Thank you. Have a good day.
Thanks. You too.